Crypto might feel like it's taking a breather, but behind the scenes, one mining giant is quietly powering up for what could be a major move. We're talking about Marathon Digital Holdings, ticker symbol MARA. This isn't just another hype play. MARA is a high-leverage bet on Bitcoin's next breakout, and its positioning around hash rate dominance, energy innovation, and regulatory alignment might make it one of the best asymmetric crypto stock opportunities available today. If you're scanning the markets for smart exposure to crypto without owning coins directly, make sure to hit that like button, subscribe to the channel, and drop your thoughts in the comments. Is MARA gearing up for its next run, or has the market already priced it in? Marathon Digital has grown into one of the largest publicly traded Bitcoin miners in the world, with a current hash rate exceeding 30 EH per second and a reserve of more than 17,000 BTC on its balance sheet. Initially built on an asset-light model that leveraged third-party hosting, the company has steadily expanded into owned sites across the US, including in Texas and North Dakota. Unlike some peers chasing speculative trends, Marathon is focused on becoming a fully compliant institutional-grade miner. It was the first in North America to operate an AML OFAC-compliant mining pool, allowing it to mine what it calls clean Bitcoin. This attention to regulatory readiness, combined with rapid scaling and operational efficiency, gives MARA a distinct edge in the sector. Bitcoin's macro backdrop continues to build toward what could be a massive rally, especially following the 2024 halving. Historically, post-halving periods have delivered 5 times returns for BTC within a year, and mining stocks like MARA have shown even more explosive gains. In the 2020 cycle, for instance, MARA skyrocketed from under $0.60 to over $44. This isn't just theory. Marathon's CEO has pointed out that miner stocks often move 3 to 5 times as much as Bitcoin during rallies. And now, with halving pressure tightening margins and transaction fees rising sharply to support miner revenues, the stage could be set for another explosive cycle. If Bitcoin rebounds, miners like MARA don't just rise, they often surge with amplified force. Marathon isn't just surviving in the current market, it's expanding aggressively. The company recently raised its 2025 hash rate target from 37 to 50 EH per second, fully funded through internal resources. That kind of scale places it among the world's leading Bitcoin miners. On top of that, Marathon is scaling its owned mining capacity. Recent acquisitions have boosted self-hosted operations to nearly 45% of its total fleet. That shift reduces dependency on third-party providers and gives MARA greater control over cost, uptime, and scalability. Global diversification is also underway, with immersion-cooled facilities in Abu Dhabi and hydro-powered projects in Paraguay expanding the company's geographic footprint and hedging regulatory risks. In 2023, Marathon made a major strategic move by acquiring 2 sites totaling 390 megawatt in Texas and Nebraska for $178.6 million. These sites now house a large share of the company's miners, slashing hosting costs and improving operational margins. Earlier deals with Compute North and others allowed the company to deploy tens of thousands of miners across wind and solar-powered sites, targeting up to 77% carbon neutrality. In Latin America, a 1.1 EH asset operation near the Itaipu Dam uses hydropower, while a joint venture in the UAE taps into unused grid power for mining and desalination support. The shift from an asset-light model to owned infrastructure is a game-changer. Marathon now controls more of its operations, from power sourcing to equipment optimization. This isn't just about scale, it's about resilience and adaptability. Marathon's financials reflect its growing dominance. In Q1 2025, the company reported $214 million in revenue, a 30% year-over-year increase, and held nearly 47,500 BTC. For full year 2024, revenue surged 69% to $656 million, with adjusted EBITDA hitting $1.2 billion. Despite these gains, profitability is still challenged. Operating margins remain volatile, around 55% trailing 12 months, mostly due to depreciation and energy costs. That said, Marathon's balance sheet is strong. With around $4.6 billion in BTC and cash reserves and only $326 million in debt, the company has a solid liquidity cushion to support future expansion. Compared to peers like CleanSpark, Mara trades at a higher multiple, but it arguably deserves it. The company's scale, BTC reserves, and vertical integration justify a premium valuation, and analysts like H.C. Wainwright have reaffirmed buy ratings with targets near $28, implying significant upside from current levels. A few developments could send Mara soaring in the months ahead. First, the approval of spot Bitcoin ETFs in 2024 triggered a wave of institutional inflows, helping BTC breach the six-figure mark. Marathon, with its direct exposure, stands to benefit disproportionately if these flows continue. Second, the company just posted record monthly production, 950 BTC mined in May, up 38% month over month. It's expanding capacity through gas-powered plants and immersion cooling facilities in Ohio, Texas, and North Dakota, putting it ahead of the curve operationally. And finally, its regulatory forward approach may be a critical differentiator. By routing all hash rate through an OFAC-compliant mining pool, Mara ensures it remains aligned with future U.S. regulations, a potential magnet for institutional crypto exposure in a compliant wrapper. Marathon has a long track record of outperforming Bitcoin during bull runs. In prior cycles, its shares rallied 3 to 5x faster than BTC itself. That kind of leverage makes it attractive for investors looking for upside without managing crypto wallets or custody risks. Institutionally, Mara is one of the most appealing crypto miners. It's US-based, fully regulated, and operates within a framework that satisfies compliance demands. Add to that a growing global footprint and a strategy focused on low-cost, sustainable energy, and it's clear why some see Mara as more than just another miner. If Bitcoin breaks to new highs in 2025, Marathon's scaled hash rate, reserve strength, and operational gearing could fuel a 100 to 300% rally in the stock. That's the type of setup asymmetric investors dream of. Marathon Digital checks nearly every box for investors looking to ride the next crypto wave. It's scaling aggressively, focusing on compliance, diversifying its energy mix, and maintaining a tight correlation with Bitcoin's upside potential. But here's the big question. If you believe Bitcoin is headed for another bull run, does it make sense to buy Mara now, before the surge begins? The answer depends on your risk appetite. If you're comfortable with volatility and believe in the long-term promise of digital assets, Mara offers compelling upside. But if you're waiting for cleaner charts, lower energy costs, or more regulatory clarity, you might want to stay on the sidelines a bit longer. So what do you think? Are you loading up on miners like Mara before the next breakout, or playing it safe? Drop your take in the comments below. We'd love to hear from you. Thanks for watching Stocks Telegraph, where we spotlight asymmetric plays before they hit the headlines. Don't forget to like, subscribe, and turn on notifications so you never miss a market-moving deep dive. See you in the next one.